So today I'm going to expose my $150,000 trading account as we work on that buyer lifestyle and retiring early. I'm going to go into specifics as to what I own in the stock, as well as the calls and puts I've sold against the position and the cash in order to collect the premium and hopefully drive a higher return on the investment. Now, keep in mind, I'll say it right now, this really isn't financial advice. You need to do your own research when making any financial decisions. And in particular, in this video, because I'm taking on a lot of risk in these trades, I wanted to address that right off the bat because it's not one I really want to see others following suit in. I just wanted to share what I've been doing so that maybe you could understand some of the stuff that I've been talking about in other videos, and maybe you get some ideas. But again, it's higher risk. I'd hate to see somebody following along and doing these types of things unless they're really comfortable trading these positions. Hello, my YouTube friends. My name is Adam Kahn, and this is Investing with Adam K. I hope everybody's having a good Tuesday. As I mentioned earlier, I'm going to talk about the two main trades that I have in my trading account. The account is right around $150,000 total. I've attributed, or I'm setting aside essentially $100,000 that I've allotted for each of the trades. The reason there's 150 is I've negotiated the margin charges on the account down to, I think, about 6% with E-Trade. It might be 6.99. I'd have to actually check to know exactly. But so I'm not super concerned if I go a little bit on margin on the account. It's an account that I opened in order to trade. I've thought about separating it so that one account is specific for HIMS and one account is for SoFi, but partially out of laziness since I've already negotiated the margin on this account and it was easier just to add the SoFi trade into the same account. That's kind of what I did. But I've thought of having two separate accounts so I could focus on each one individually. And what I watch throughout most days is this. But to be perfectly honest, it's kind of in a position where I don't really need to watch all the time. So I don't do a whole lot other than pay attention out of curiosity where the market's going. The thing is, part of why I say that is the only thing I can do is make rash decisions that I didn't really intend to do because my goal is to allow the options to expire, collect the premium, and then look to new options to sell. So stick around, I'll keep talking about it. I'm going to pull up my little sheet that tells me what I have so we can get into it. The other reason I haven't shared this previously is because to me it's a decent sized position to just be pseudo playing around with as a trade. But those of you who've been watching the videos for a long time, my background was I was a floor trader at the Chicago Mercantile Exchange for a long time. And you tend to deal with margin for the most part. You're buying and selling. I was trading currency futures, and each contract has a value of about $125,000. And in the accounts, normally you just don't have all that much money. You're buying and selling all the things all day long, just trading it, trying to make $12.50 at a time. You're not putting in all that money to make those trades and you're trading on margin. So when I do things in the stocks, I'm used to some pretty big swings on some pretty small amount of investment, and it just has set the mentality that I have for the things that I do. It's part of why I really mean those disclaimers and say, don't listen to anybody else, don't follow them. You definitely don't want to trade too big and put on a position because you're watching somebody else and thinking, geez, I could do that, or whatever goes through somebody's head. You really need to determine what makes sense for the account that you have. You also should probably talk to a financial advisor if you're not sure. Doing your own research is really important and understanding these things that you're getting into. I'm watching a lot of the people who on YouTube who talk about calls and selling cash secured puts. And I'm not sure that they really know the risk involved with it. And I'm not sure if they're just trying to get clicks and views and make it sound better than it is, because you can have significant ups and downs. And HIMS will be a good example of that, even though I'm sticking with the position and going through the trade. So let me walk you through a few of the, I'm going to tell you exactly what I have on actually, so that you guys are well aware and maybe you see how much risk there is in it. So I'm long 1,000 shares of the stock. Um, I think my average purchase price, I didn't look at it too closely because quite honestly, my goal is the premiums that I'm taking in from selling the options. My attitude was is if I allotted about $100,000 for it and I could take in close to $1,200 a month, that's really good return on that investment. If the value of the stock goes up or down, I don't want to focus on that too much because my goal is that monthly return from selling the options. So I think I'm long from about $53 a share. The first option that I had that already expired is I was short the August 22nd 40 put, but I only took about 33 cents for that. Now, when I sold the put, it was somewhat recent, and I think it was only a weekly option that still needed to drop about $6. And when I did the math throughout the year, I thought, geez, even though it's only 33 cents, which is $33 since each one's an 100 lot, I didn't mind picking that up for 1 week of an option because that would actually add up over the year to significant returns. I also have a September 5th 70 call that I got 83 cents on. I think when I sold that, there was about 3 weeks left in the option. And similarly, when I multiplied that out by 15 or 16 or whatever, like I don't have the math in front of me, that was excellent return if I could duplicate that time and time again. Most of what I sold is for a September 19th expiration. Now, it was a little more than a month when I sold them. It was recently after the earnings when the stock was first beginning to fall. So I got some really good premiums, especially on the call options that I sold. A, because the price was higher, and B, because the earnings had recently come out, and volatility tends to spike when the earnings are coming out. You even tend to have a few days afterwards, even though the stock's already moved. So I sold this one. I actually sold more recently. I sold one of the September 19th 65 calls, and I only got 45 cents for it, or 46 cents. And I was okay with that because it was more recently, and the stock is trading below 50. And my thought was, if it rallies $20 in the next month and I get taken on that call, great. I got no problem with that. And 46 cents a month is what, 460 plus another 90 some odd. So you're at like, $550 ish for the year, which is well over 10% return for a stock that's trading approximately 50. It's actually below it, which fits into my guideline of how much I'm trying to make throughout the year. Like my goal is if I can make 12 or 15% just selling the options, if I get lucky and the stock goes higher, well, great. That's just an added bonus. Now, I picked Hims because I do like the company and I think there's possibility there. I also picked it because it has really high volatility, so there's good premium in the options, but it's not like one that I have a huge conviction on. So it makes it a little bit more interesting, and it makes me a little less surprised about what direction it goes because I wouldn't be surprised at all if it really craps out and drops down to $20 a share. Obviously, I'd be really annoyed at that, but it wouldn't be anything that shocks me or throws me for a loop and catches me off guard. So this is where you'll see I got pretty good premium on some of these other calls because A, the stock was a little bit higher, and like I said, it was closer to when earnings came out. So I have a September 19th 75 call that I got $1.90 for, and a September 19th 90 call that I got $1.30 for. Like that's the stuff I really love because if the stock gets up to $90 a share, I'm thrilled to sell some of it. I also am short one of the September 19th 35 put that I got 69 cents on, which again, that one was a little bit more recent when the stock had fallen, but it had a shorter timeline as to when it's going to expire. I'm short two of the September 19th 40 puts that I got $2.68 for. Now, again, this was a little further out, closer to when the earnings were done. The stock wasn't that close, but because the volatility was so much higher, I really got a nice premium on that. I had sold one originally close to earnings, and then as the stock dropped, there was a point where it kind of went up in price again, which is when I added on and sold the second one. So I have two of those, and I'm also short one of the September 19th 45 put, which Stock's gotten as low as like I think 41 and change, so it's gone against me pretty good. I collected $2.62. I know it's trading, either $44 a share or $45 a share when I started doing the recording. So it's come back up a little bit, and I guess we'll see what happens. Now, I have some later dated ones that we'll talk about as well, but you can see already how if the stock really drops a good bit, I'll end up getting longer. I'm short a total of, you'll hear the other ones, of 6 puts. So I could end up, worst case scenario, being long 1,600 shares and getting long, essentially longer as the stock continues lower. That's the risk with selling puts, especially if you get super aggressive about it. And these guys talk about it like it's free money. Like, I'm already long 1,000 shares, and as the stock continues to fall, I'm losing money on what I already own. And if it continues to fall, I'm getting longer the stock as it goes lower. That's super risky. So don't listen to these guys about, oh, your cash secured puts. It's just a super easy thing. It's free money. If you want to buy the stock anyway, like, it really better be that you're dedicated that if you want to buy the stock anyway, because sometimes news comes out and you are filled and it is way lower. So be very careful. Um, Now, I also have an October 17th 36 put, which I collected $1.52 for. And then I started looking out to like November and December to give a longer timeline, get more of a premium, because I wanted to collect more money. And I even started looking in November because it's after when earnings come out next time. So there's a little bit more of a premium. Now, as that date gets closer, so this is generally the life cycle of most stocks. As that date gets closer, the volatility tends to go up. People get really excited as earnings come around, and volatility is generally, not always, the highest on the day before or the day of earnings, which can create a really good opportunity to sell some options. Now, the computer algorithms and the professionals understand that that'll fall out. So when you go out to longer term options, the volatility will go back down. And throughout the life cycle, what you'll see is after earnings comes out, it'll still stay elevated for a few more days while the stock bounces around a bit. And by the next week, it'll come down to where it actually gets pretty low over the next month or two once the stock seems to get stagnant after earnings have come out. Now, some people like to talk about options, and just by accident, I'm sure, they talk about how much money you're going to get for options around the time of earnings. Why? Because the volatility is the highest, it sounds the most attractive, but when the stock slows down and it's the middle of the month, generally falls pretty low, and you might run into a situation where it doesn't look like you're getting a whole lot to continue to sell options. Now, come September 19th, I will see where the market is and if I'm still getting a nice premium to be able to sell them, or if I have to start looking out to November and December to get what I'm hoping for. I've also noticed that as earnings start to get closer and closer, sometimes the stocks start trending in certain directions. And it can be, pretty characteristic that the same, like Hims might have a personality that maybe it drifts higher going into earnings, or maybe it tends to drift lower into earnings. So you really have to get to know the stocks that you're trading as opposed to the ones that you put money in and invest in where you just kind of set it and forget it. So if I repeated this one, I think I did. I'm short one of the October 17th 36 puts that I got $1.52 for. And then for November 21st, I'll rattle through these 4 calls I'm short. I'm short a 75 call that I got $2.04. I'm short an 80 call that I got $2.03. I'm short a 90 call that I got $1.21. And then the best one, which I sold just before they reported their earnings, I'm short a 95 call that I got $2.20, forgive me. Now, the stock was trading, if I remember right, in the high 60s, if not $70 a share. And it was right before earnings when volatility is the highest. But at the time, what went through my head is I don't care if the stock shoots to $120 a share. I'd be thrilled to get $95 and I'm getting $2.20 on it. Now, I have to wait until November for that one to expire, which is again through other earnings. But that was a nice premium to be able to get, and I was thrilled to get it. So if the stock gets back up there, by all means, happy to get it and happy to collect the $2.20 in the meantime. Now, I'm also short two options for December. I'm short another $95 call for the same reason. If HIMS gets to $95 and I end up selling those shares, that would be like I'd be jumping a joy doing a follow-up video. And I'm also short a 35 put that I got $2.94. Part of why I've been looking at like the 35s is the mid 30s. That's about as low as it got last time when it was in this range between low 30s to mid 70s. Feels like it's redoing that same cycle. That was my mentality on it. Uh, I don't really think it's going to get that low, but that's why I said anything can really happen and there's a lot of risk to it. It's very possible. I wouldn't be shocked if HIMS just keeps going lower. I really hope it doesn't, but it also shares that I'm taking some heat. I don't love it. It's driving me nuts in some ways, but you have to stay convicted to the trades you're putting on and accept the loss if it just doesn't work out the way you're hoping. I don't want to ignore that. I know that everybody else on YouTube is making $8 trillion and they never have any losers, but that's not really the case. And don't go buy their ebooks or whatever else they're selling because they're just making gazillions of dollars. Now, some of them might be. I don't want to take away from all of them, but some of them, at least in my mind, I'm sure they're being dishonest. Just too hard to believe some of the nonsense I've listened to. So, total collected through the November 19th strike price, I'll have collected a little over $1,300. The exact number is 1349, and that hits my target. I'm collecting 1349. I didn't really put out the entire investment. I've only got, it's still a big number. Half of it invested straight in. If I get executed on some of those puts, it'll get more so, but that's more than double the return. Like if I continue with only half the investment in the stock and I'm able to get 1,300 a month, man, I'm making 30% returns on that. I'd have to sit down and do the math, but I'm crushing it. The total that I've collected is a little over $2,700. Now, I'd have to wait through December on that, but that's good return, and I'll be able to sell more calls and potentially more puts as the ones that I've already sold expired. So I'll keep you updated if you guys like the information on this trade. I don't expect people to follow along so much, but one of the people asked if I could talk a little bit more about what's in the different accounts. I probably won't go into the set it and forget it too specifically. Like I'll talk about the percentages and stuff, but I'm a little bit shy, and some of it is just I don't want to come off the wrong way. But my worst case scenario so far is that I end up being long 1,600 shares, but I'll get much more aggressive on the calls that I sell if I start getting assigned more and more shares of the stock. Um, and then the other trade that I have in the account, we'll talk about SoFi as well, and keep going from there. Now, SoFi is a really interesting trade for me. It's one of those I kind of kicked myself on. I'd bought SoFi years ago and it was drifting against me, and really for no reason other than I was tired of it being against me, I got out of the trade. Uh, for a little while, it looked like a great sale as the stock dropped lower down to, I think it got down to like $7 a share. But as it slowly drifted back up, I've like been watching it in the background because I always liked SoFi. I like the CEO. I like the direction they're headed in. I just feel like nobody cares about it. And I see people on YouTube who love it, but I just sat there ignoring it as it started drifting higher because I have a tendency that on purpose, if I get out of something that I've taken a loss on or a gain, I try not to look back at it. I try not to bother. But SoFi was one of those that I kind of thought it would go higher at some point, and I just got tired of waiting for it, which is a terrible personality trait. Like if you have conviction in a stock, you really should stick to it. Well, after their last earnings, when they already have shot higher, I kind of thought, stop ignoring it. You still love what the CEO's talking about. You really want to be long the stock. So I bit the bullet and bought back into it. I figured I would do it as a trade. I've sold puts and calls against some of the position. I haven't sold too many calls like I have with HIMS because it's more like I want to be long SoFi. And I'm using puts to try to get a little more oomph to the trade. So it'll probably be heavy weighted to puts. And I put on a decent starting position right off the bat because, like I said, I'm kicking myself that I ever got out and I wanted to be long SoFi. So I'm long 1,300 shares. My average price is around $22 and a half. And here are the options that I put on. I'm short one of the September 19th 28 call. I got 39 cents for it. I'm short one of the September 19th 30 call. I got 21 cents. And part of it is I don't expect it to get that high that fast, but if it does, I'll get taken on those calls. I'm short one of the November 21st 36 call that I got 51 cents, and I'm short one of the November 21st 40 call that I got 42 cents on. Now, those ones, I'd be thrilled if I got taken on those calls. That means the stock's moved really far in a really short amount of time. That's a good trade. It's hard to kick myself, even though I think the stock's going higher, if I get taken on those, because if it gets to 36 or 40 when it's only trading about 25 currently, that's incredible return in just a few months. So I did sell a December 19th 18 put for 86 cents. Part of the reason I sold that put is just for a reminder to myself how long I want to be in the trade and that if it drops, I still want to be long. Even if it gets down to 18, I want to continue to be a buyer. I've allotted the same amount of money for it. So I keep having to remind myself it's a crazy big amount of shares. So mentally, if I ended up being long, and I don't have this many puts, so but if I ended up being long 3,000 or 4,000 shares, mentally, that's like a huge position. It's still the same dollar amount, but for some reason, for me, mentally, when I have more than 1,000 shares on, it just starts feeling different, and it shouldn't. I should really focus on the dollars, not the amount of shares, no matter what a stock is. It's much more important to pay attention to the market cap and the value of the company than the amount of shares you have on. I don't know why mentally it messes with me. And, you guys should pay attention to that too. Like, you're not owning more stock if you have more shares of a lower priced company than less shares of a higher priced one. It's really more important the market cap and what your percentage of the company is versus how many shares. It still messes with me, so I don't want it to be shared the wrong way. I'm also short three of the October 17th 20 puts, which I got 63 cents a share. I'm short three of the September 19th 21 puts, which I got 44 cents a share. I'm short three of the September 19th 22 and a half puts, which I got 96 cents a share. Short three of the September 5th 23 puts that I got 75 cents a share. And I'm short two of the September 19th 23 puts that I got $1.18 a share. Now, for a little bit, because this is right after the earnings came out, when I sold those, I think it was maybe around $24. The stock fell, and it looked like I was going to get filled on a lot of those. But then the stock has since reversed, and I think last I saw, as much as I said $25 earlier, I think it's closer to $26 a share. I still have almost a full month until these options expire, so they could very easily get filled. So far, by September 19th, I've collected $941, and in total, 1,309. If all of my puts get filled, I'll end up being long 2,800 shares, which, as I've shared, would be super uncomfortable because even with the 1,300, it's already above my 1,000 share threshold. And similar, same with HIMS. but I'm really focusing on keeping this a trade and being reasonable about what I was willing to risk and what my goal is. It's why I've separated it from my other accounts where I just wouldn't want to have this type of risk. Yeah, I wouldn't want the swings. I wouldn't want to be worried if I'm down a bunch of money one day. But I really wanted to press the envelope a bit because I think my strategies will work out. And I never really put them to the test or gave myself the opportunity, and myself included, as I try to live retirement and try to push for a little bit more money. These are things I wanted to do to try to push over the edge with using a smaller percentage of the account to see if it works out the way that I hope it would. Now, maybe it doesn't, which is why I said if you like the video, I'll update every now and then and look back at it. Hopefully, I don't get frustrated and just get out of the trades. I do have a couple of Palantir leaps in there that I threw in the account that might be a huge mistake. I mean, Palantir to me looks so overpriced and so overvalued. I only did it because part of me also remembers what Tesla was like in its heyday, as well as Nvidia in its heyday, and they just kept going and going and going when myself included just thought that's so crazy. And I feel like Palantir is kind of the it stock right now. I use the leaps like I advise people not to for the reasons that people do use them. I didn't have to put quite as much money out of pocket, but I also recognize if the stock drops enough, I lose that entire investment. It is not like buying the shares. It allows me to be more leveraged, and I was willing to lose the amount of money I invested, but I also don't really recommend it for people. I don't really recommend them doing these type of trades. It's why I'm always saying do your own research. Like usually I think a lot of people just say those disclaimers because they feel like they have to say those disclaimers for lawsuits. When I'm saying it, I really believe it. If you don't have the type of money to take these types of risks, and if you work a job and have some money in account for a retirement, you really can't do these things because you can't just set it and forget it. It's great to learn about it. It's good to have an understanding of how things work and the different options, the different types of trading strategies there are out there. But to think it's realistic to implement them and you can go to your job and just totally ignore the account and you're going to get rich faster than anybody else, I think it's a little bit naive. So please, by all means, do your own research, stick to the things that work for you, and just be conservative out there. I just figured I'd share it because I was asked to, and maybe it helps me stay with the trade and the goal of what I tried to do with this stuff. Anyway, if you haven't already, hit that subscribe button, smash the like button, make tons of comments in the comment section. I'm curious what you guys think about the trade. Did I explain it well enough? Do you understand what I have on and what could happen with the market? I think odds are most of my calls will expire worthless, especially some of the shorter dated ones. I probably would have paid to get out of them, but when I looked, the offers are so ridiculous, just I wouldn't pay for it. Like the September 5th 70 call, I think it's beyond unlikely that that actually gets called. So I figured maybe I'd pay a couple of pennies and get out of it, but quite honestly, I can't get out for less than like 15 cents, which is not a lot of money. But when I look at it as a percentage, like it's really stupid and I would never pay the 15 cents. I'd rather take the risk that it gets there and be thrilled if it does. Anyway, once again, I know I just said it. Hit that subscribe button, smash the like button, make some comments in the comment section. Let me know what you guys think. Do you have any trades that are similar to this? Are there any companies that you trade like this? I'd be curious. I mean, I like the banter back and forth and hearing from you guys. Have a great day. Hopefully, I'll have time to do another video tomorrow, and have a great trading week.